Welcome to ShortView Trading. This is your morning market hit for Friday, 24th of September. What matters today for traders? Well, there's been a marked shift in the tone from central banks this week. That started with the Fed on Wednesday, which all but announced the start of tapering in November and signaled a hike next year. And as you can see in the rates market, we rapidly brought forward the timing of hikes, with implied Fed funds rates moving sharply higher, particularly for the second half of next year and into 2023. That theme then moved to Norway, which became the first major Western central bank post the pandemic to raise rates and promise more hikes. And the Bank of England was more hawkish in their message yesterday. They opened the door to hikes, and two of the MPC members voted for an early end to QE purchases. And just like we saw in the US, rates backing up. You can see short sterling implied rates bringing forward the timing of hikes in the UK. And with that move in rates, we had a decisive move in bond yields yesterday, with the US Treasury yield up sharply, breaking out of its recent pennant formation to close above its 90 and 200-day moving averages. And interestingly, given the move higher in real bond yields yesterday, gold has come under pressure. It continues to break down and remains technically weak. So what about equities? Well, they sold off at the start of the week on fears around Evergrande and China, and no doubt in anticipation of a Fed announcement or hawkish message. By midweek, we'd had signs of capitulation, higher volumes. We also had a pickup in downside put protection in portfolios, with the CBOE put to call ratio moving on to strong buy. And as you can see from this same chart, the price pattern in the S&P 500 became V-shaped, which is a classic sign of capitulation and often marks a low in equities. So earlier this week, we were recommending long positions in our daily trading publication. It's available on the website to subscribers. We also offer a free trial. If you're interested, click on the link below, enter your name, email address, no credit card details required, and we'll send you our daily trading publication free for 7 days. What gives us an edge as we go about making recommendations on US equities? Well, it's indicators like this one you see on your screen now. This is our main risk appetite indicator, designed to pick key turning points in markets. It was on buy earlier this week. That was a key reason for our long US equities recommendation. So what's the current signal from that model, and indeed our suite of other short-term indicators? We'll have a look at our daily trading publication for detail on all of that. What are we watching today? Well, out of the US, we get Fed speakers. We've got Mester speaking on the US economy, Powell is speaking. We also have George speaking as well. That was your morning market hit. Do follow us on YouTube, search under ShortView Trading. Join us on Twitter, LinkedIn, and or Facebook. Thanks for listening.